Gary Stevenson, welcome to Herald NOW Business. You made your name as, I guess, a trader in the markets who quit and then told the world about what that was like. Can we get a bit of a take about what you see when you look at the markets today?
It's a difficult market. So ever since the beginning of COVID, I've been betting really aggressively on big asset price rises. The first big bet was gold. I've been running like a massive gold long since March, April 2020. And then as gold's gone up and up and up, I've been moving that into stocks and building a big leverage long gold and stocks. So basically my big shout from the beginning of COVID was massive deficits, massive accumulation of cash by the rich. We're going to see massive asset inflation. But obviously I'm sitting and talking to you now at the kind of back end of an enormous asset inflation. I've had to sort of massively reduce that gold position. I'm still sitting long gold, long stocks. But it's hard to really have much conviction on that, given the massive moves. I don't like tech. I've been shorting tech against that. I've been within the stocks. I've been focusing on like high dividend stuff, value stuff. But then even that has moved a lot. So it's that kind of tricky position now where all of the big moves have already gone a long way, and it's a question of how much further. I still think long run, the big picture is increases in asset price rises. And I believe that that will continue because of continuing increases in wealth inequality. I think if you shift power away from working people towards the very rich, that can only mean incredibly expensive assets. Because at the end of the day, what the rich people buy, assets. But it's difficult to put massive money on that right now, given the huge moves we've seen, especially in the last year and a half.
So we're seeing a really different picture here in New Zealand, according to the Reserve Bank anyway, if we can follow their analysis, that property cycle is not going to deliver asset growth in the near term, very little in the medium term, that most of the consumption growth is going to come from wages, from salaries, from employment growth. A very, very different picture from what you were talking about.
I don't think long term falls in house prices are really sustainable in the context of these massive aggressive increases we're seeing in stocks and precious metals. I don't see how stocks in particular can become more and more expensive while house prices fall, because at the end of the day, rich people are going to diversify. And I think what you're going to see if those house prices don't start to rise, because the main reason is rich people don't want to own 100 houses because they don't want to fix 100 people's boilers. And what you're going to see is what you see in a lot of in the US is corporations fill that gap. Corporations come in, they raise the money from the rich, and they start becoming massive landlords. You know, you see BlackRock and Blackstone in the US buying up the properties. I think in the long run, if housing in New Zealand, in the UK, doesn't go up, you're going to see corporations fill the gap and push that up. And what that means is more ordinary people renting from corporations. The big thing that I want to do, the reason I'm coming to Australia and New Zealand, is I want to communicate to ordinary people the reason your living standards are falling is specifically because of that massive accumulation of wealth and assets and power of the very rich, the billionaires.
Gary, if we accept that that is the problem, and some people might still argue that it's not, what is your solution then? How do you fix it?
It's got to be tax. It's got to be. I'll be very clear when I say that.
But tax doesn't work. I'd love to hear exactly how you make it work, right? Because the Nordics have tried this, Germany have tried this, other places have tried this. It hasn't worked. They've stepped away when the wealth transfer the asset transfer happens. People leave the market.
Yeah, and I'll tell you two other countries that have tried it, the UK and the US in the 50s, in the 60s, in the 70s, countries where my dad was able to work for the post office, regular job, didn't go to university, one income, bought a house, 3 kids, retirement, pension. You look at the history of Western countries when we really, really seriously tax wealth. I want to make it clear here, I'm not talking about raising tax on working people, right? I'm not talking about raising taxes on doctors, lawyers, heaven forbid, even bankers, YouTubers, TV presenters. I'm talking about taxing the really, really rich here. Families and individuals with wealth of more than 10 million, 20 million, $100 million and pounds. This is where the real problem is. See,
just to be clear, it's not with people who've just made 2 million quid out of gold.
Well, I mean, to be honest, if you've got £2 million, you're not the problem. The problem is if you've got £20 million. I mean, this is the serious problem here, right? I understand house prices have gone up. Ordinary people have got a little bit of money. Listen, I come from a poor family. I worked hard. I worked in the city. I made a lot of money and I paid 50%. That's the income tax when I was working. At the same time, the Duke of Westminster, aristocracy in my country, inherited £10 billion more than 2,000 times what I made, paid nothing. Why is it that ordinary hard-working Kiwis are paying their 40, 50% and billionaires are paying nothing? If you continue with that tax system, I can tell you one thing with certainty. In 10, 20 years, ordinary Kiwis will own very, very little, and those assets will be owned by the super rich. This fall in living standards, I am very confident, and I've made millions of pounds betting on it, is because of a change in the wealth distribution. If you want to understand why my YouTube is popular, go watch the first video. June 2020, I predicted a massive cost of living crisis, inflation crisis, house price crisis, gold price rise, stock price rise. And the reason I was able to do that is the same reason I was Citibank's top trader, because I'm good at this. I shouldn't be on YouTube. I shouldn't really be on this show. You can't afford me. If you wanted to pay for my time, it would be above your budget. I'm doing this because I'm seeing living standards collapse in my country and your country, and I am trying to get regular Kiwis to stop it. The reason I stopped writing for The Guardian and started talking on YouTube is because I could see that these rich people are not going to fix it. When you have a crisis of inequality, that benefits rich people. And unfortunately, that includes a lot of senior politicians. So my message to the New Zealand public is the fire engines are not coming. Those people, the economists and the politicians who are supposed to protect your interests, most of the time, they're going to do fine. They're going to do fine. You need to hold their feet to the fire. You need to demand that they tax wealth instead of work.
Gary Stevenson, thank you so much for your time, which I know we could not possibly afford if you hadn't given it so freely.
Thank you. Nice to meet you.
Nice to meet you, mate.